What's up, traders? This is Ferris with Trade with Tex, and today we're going to be going over a simple chart indicator that I use every single day, the Bollinger Bands. Okay, now this is my favorite indicator by a long shot. It's very effective for day trading and swing trading. Okay, we're mainly going to talk day trading though, and this is the fourth video of the Learn to Trade YouTube series, so I'm going to try to keep it simple for the beginners because I know that this can be a little bit overwhelming, but I got to show you my bread and butter here, right? This is one of the best trading indicators that we use, and let's kick it off. All right, so two strategies that we're going to go over, but first things first, I'm going to show you how to add it to the chart. So this is Thinkorswim. A lot of you guys are probably already familiar with this platform. To add them to your chart, you just need to go over to Studies, okay, Edit Studies, and then type in Bollinger Bands. If you don't want to spell it all out, you don't have to. BOLL will bring that up in the drop down, and you just double click to add it to your chart. Okay, now we're going to keep it default settings. The only other, commonly used settings is a lot of people will switch this to 21, the length, because you're given 3 lines here, and the mid line is the most important. That defines the other 2. Okay, I'll show you what I mean. Now, I made this a little bit thicker so you guys can see it better. This is set to 2. Other than that, all the other settings are the same. Okay, so add it to your chart. And you can see these lines, 1, 2, 3, pretty thick here. Not as thick as Kim Kardashian, but definitely up there. And the simple way to read them is just by defining whether or not there is a trend and how strong that trend is. So in this case, you can see that based off the middle line, right, the mid Bollinger Band, that's the 20 SMA, it's horizontal at the open. That means that for the first, hour, 2 hours here of the day for trading the S&P, we are flat. Right? It's not giving us a whole lot to work with. Now, normally the average trader says, we're not getting a strong trend. I'm done trading for the day, which is fine. It's good to be disciplined, but it's also good to be keeping an eye out for opportunity. So in this case, for the S&P, the Bollinger Bands are actually telling us that there's a setup here. And one of the simple strategies that I use regularly, just to kind of introduce this, is the back and forth strategy here. So to simplify, it's meant for choppier days, so it's more effective on days where there isn't a breakout. So if there is no trend present and the range is still intact, meaning we have not broken up for the day, we have not broken down for the day, we're just flat, then you're gonna go and use the back and forth strategy. Okay, now the back and forth strategy is as simple as it sounds. You just wait for it to pull off the lower, or if this was an inverse chart, pull off the upper. Okay, so right here, and then you play the move back to the mid Bollinger Band. Now, that doesn't look like a huge move, but those of you that trade options or even, momentum tickers for that matter, you know that this move on the S&P right here is still at least a 50% gain on puts, right? You know that this move right here with calls is still a pretty substantial gain. So this is really good for active trading. All you have to do is make sure that we hit that lower Bollinger Band or upper Bollinger Band and then do not hold it, right? We get rejected, so it close in the other direction. Also, quick side note, if you have not checked out the rest of the channel, we got a lot of good educational videos on there, other indicators, other strategies that we use, and you can actually join us for a free week in the chat, no credit card, no nothing required, with audio, screen share, chat access, all that good stuff. The link is in the description below. Now, this is a 15-minute time frame, so we're looking for somewhat large moves intraday. And you can see that with this indicator, you're not forcing anything. See how this was a setup right here, but we didn't quite hit the lower? That means we're not taking that trade. So the Bollinger Bands require a certain degree of discipline, and again, they're pretty straightforward. So this is a simple example. As you can see, at the end of the day, we did pull off of the upper. That would have been another setup, but there wasn't enough time left in the day. We actually did end up hitting it, but I wouldn't have taken that just because we only have 15 minutes till the closing bell. Okay. Now, that's one of the strategies. It's just a basic back and forth, and there is one more way that you can play it, which is just a cross of the mid Bollinger Band. So when we cross over the mid, we look for a move to the upper. If we were to cross down, we would look for a move to the lower. So right here, this was a cross down, we should look for a move to the lower. It barely missed it, in which we would have gotten stopped out for a gain, okay? Later on, we cross over the mid, see how we closed the candle above right there? That would be your entry point, okay? Right as that candle closes, and then this would be your target up here at the upper Bollinger Band. All right, so it's pretty straightforward. Not really a whole lot to dive into on that end. I just want to show you the other strategy and explain to you how these work. So the whole idea is that the upper line is +2 standard deviations, lower line is -2 standard deviations from the 20 SMA. If you don't understand the math behind that, it's not that crucial. All you got to know is that all of this is based off the 20 SMA. So when you're first pulling them up, when you're first reading them, your first question that you're asking yourself is, what is the trend here? Okay. And again, the second part for how to determine which strategy you're actually using is just by asking yourself not what the trend is, but whether or not we've broken out for the day. So if we're above the prior day's high, above the 52-week high, you kind of get what I'm saying. Okay. Now, if we have a trend intact, you use a different strategy. And this is the one that I've used, I'd say, for at least 4 or 5 years, because I don't know of many others that know of this strategy. So here's the secret sauce. I'm going to give it to you. Reward those of you that have stayed till the end of the video. It's called a Bollinger Band hug. Okay. Now, the Bollinger Band hug is better for high momentum strategies. So the first strategy I showed you was a low momentum one, where we're going back and forth. There's no real trend, right? The high momentum strategies, we need to check both of these boxes. Okay. We need a stronger trend. We need some range. So let me show you this on the 5-minute, because we'll have a higher frequency of how often this sets up. And this is the same trading day that we were looking at, nothing different. The only difference is what time frame we're looking at. And as you can see, the Bollinger Bands work the same with the back and forth, right? See how we pulled off, went to the mid, got rejected, went back to the mid. All of these are trade setups with the Bollinger Bands. But the hug strategy, it sounds really friendly, it's actually kind of chaotic, is just based off of momentum. So see how the trend starts shifting up, okay? The idea is that if we can have multiple candles hitting the upper or lower Bollinger Band, hugging it, right? Because we can't just hit it and then walk away. We actually got to hug it. So in this case, if we can get 2 candles that are hugging it on whatever time frame you're looking at, in this case, we're using the 5. If we get 2, then that means we are set to ride that trend. Okay. Those of you that have used Keltner channels, you know how Keltner channels also have a hugging strategy. That's kind of where I got the idea from. So in this case, this was the first time after, first couple minutes played out. Let's say you didn't trade the open. This was the first time where we actually had a candle hit and hug it. Now see how we tapped it here and we didn't hold? That's not a hug, right? It's like one of those half arm hugs. That's not really a hug. This one, we're hugging it tight. And as soon as we pull off of it, you bail. That's it. So here's the first candle that hit. Here's the second candle that hit. You are in. And then as soon as we pull off, you are out. Doesn't look like there's a huge move here, but believe it or not, you catch some huge momentum moves. So see how the trend started warming up a little, right? We hit the upper Bollinger Band and we hugged it. That showed us a shift in momentum. That will check that trend box so that we can trade this. The best moves that you're going to get with this strategy are if you can check both boxes, a range breakout too. So if we look at the recent S&P days, and I'll show you the 15-minute. So this was Friday. We were just looking at Thursday, okay? And then we have a couple of days where there was considerably more strength, right? And in this case, you can just draw the prior day's high, right? This is the prior day's high. You can see this was a breakout day. This was the prior day's high. Not a breakout day, not a breakout day, a breakdown day, but we're only talking about the long side for now, okay, the buy side. So if we look at the breakout day back here on whatever this was, Tuesday, Monday, you can see that we're looking at the 15-minute, but let's use the 5. You can see that the upper Bollinger Band hug will capture bigger moves and you can always get back in. So you actually saw it more effectively there on the 15-minute, but see how we hugged it right here, right? 1, 2, 3 candles, we bail. Fast forward, look at the second move. So that's still effective, right? That's still effective. We got in for a profit, or we got out for a profit, but look at the second move here. That's the candle that confirms, because 1, 2, hugs, 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 hugs all around, and then we pull off of it. And look what happened when we pulled off of it too. This is another back and forth setup where we crossed below the mid, so that told us we were moving to the lower. Hug, 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 and then we pull off. So we've actually managed to use both strategies here. Ideally, we're only using one based off the trend that we have, but this is the hug strategy, and that told us that we were going to keep running up. Now, it's really that simple. I'm not going to get into any more details. The only thing I'll add is that the larger the time frame, the larger the move. So if you are debating what time frame to use this on, the 5 and the 15 work very well. The further you go out, the more effective it's going to be. So for example, if we're looking at these time frames, just assume there's a minute there, right? 1 minute, 5 minute, 15, 1 hour, right? 2 hour, 4 hour, and daily. All of these are effective. The further that you go out on that time frame, the larger the move, the larger the holding period. So if I want to swing trade with Bollinger Bands, I'm going to be looking at least the hourly, more than likely the daily time frame. Okay, so the 1 year, 1 day. And in this case, anything that's under the hourly mark, just assume that it's intraday. Okay, because obviously we're looking for smaller moves with those time frames. All right, so thank you for those of you that stuck around to the end of the video. Hopefully you learned a good bit about Bollinger Bands and how I use them regularly. If you want to, you can jump into the Trade with Tex chat for a free week and learn them live, right, with some real trades. Okay, but thank you so much. Like and subscribe if you enjoyed the video, and I will talk to you next time. All right, take it easy, folks.